Thank you everyone for your attention, as always. We have another best practices session now, and I love the title of this one, What's Governance Got to Do with It? Measure the Value. Our speakers are Robert Guberud and Jim Tsilemos. Robert is the VP of Information Quality Governance at Stream Integration. In this role, he's responsible for identifying key initiatives and implementing solutions within enterprise information governance and quality frameworks, as well as information value chains and business language modeling. Jim leads the enterprise data architecture practice for the Canada Post group of companies. He and the data architecture team are responsible for architecting solutions that ensure corporate data is designed and leveraged to meet tactical goals while keeping the strategic vision in mind. So with that, I will turn it over. Thank you, gentlemen.
Thank you. Hello. Hi. I'm going to start off with a couple of slides and turn it over to Jim in just a couple of seconds. But as was mentioned, this is about the measuring the value of data, which I think Mario set up quite well, saying that you've got to look for the value. That's where you'll find purpose in a data governance organization. What we're going to talk about today is how you sustain that governance organization through value management. And so, value management. So, data value management is about the idea that you can score the data. And I think everybody's pretty familiar with the whole concept of credit scores, where 700 score is good, 500 score is bad, and anything less than that, you forget about the loan, right? So the idea that you can score data in the same way is something that we've been looking at and thinking about for a while. But imagine where the confidence score will be as ubiquitous as a credit score, where scores are standardized and understood, and information is trusted, right? But what happens, though, is still you go to the business, and the business groups are going to say, well, so what? How does a score, a data score, help me in my day-to-day business operations? And so that's where we need to look for profit motive. We need to talk about data in terms of creating innovation, creating new jobs, providing new services. And so if you can't talk about data in terms that the business wants to understand and talk about, you lose them, and it becomes simply an IT problem. So to make it a business problem, we have to turn the conversation from a discussion of data, bits, and bytes into one of business dollars and cents. And so we've looked at a number of different studies out there, and Forrester Research interviewed 330 different companies last summer and asked them a simple question: what is the maturity of your data governance program? And what they found when they put that in position against the year-on-year growth for these companies is those companies that were growing the quickest, over 20% year-on-year growth, also had the highest enterprise-wide data governance programs, and that's characterized by a cross-business initiative enterprise governance program, where literally everyone is concerned about implementing data improvement or data quality. And so what we look at to measure the data is what we call a data value continuum, where to grow the business, according to this correlation here, you need to grow the value of the data. To grow the data value, we need to improve the data quality and data governance, as well as other data management programs. But as we all know, to improve any process, we need to measure. And so we need metrics and measurements. And then if we have measurements and metrics, we'll need something to measure, and that's where the metadata repository comes in. So by consolidating all of the measurements from the data governance program into a single metadata repository, all the project management for data governance goes into that repository. We can start to then create metrics, visualize our progress that allows us to improve those data quality processes, which gives us greater data value, and that then is what we can use to go back to the business to show them in order to increase the value, we need to increase the data value. And so that's it in a nutshell, is that if you want to talk about value, it's not just about it's a higher quality or it's a better score. It's that we can save money, we can improve improve revenue, decrease costs, or mitigate risk.
Let me give you a little bit of a perspective of, I guess, the group's perspective, architecture, data architecture perspective, a little bit of a historical perspective of what happened when we came to play and tried to push data architecture or data governance in the group of companies. In the beginning, there was a message, but it was getting too long. So, in the beginning of the message, data architecture, myself, when I started at the group of companies, we laid out a set of principles that we wanted to work by. And they were very, very simple principles, not rocket science. Source data from the system of record, referential integrity, stuff like that, very simple stuff. But unfortunately, maybe not unfortunately, but it's just a reality. When you're trying to install those principles or make them work in projects, sometimes they cost money and extra effort. So I looked at it from a very selfish perspective, where the data architecture team looked at it from a very selfish perspective. Said, we need a data governance team in the business to basically push our beliefs or our principles. And coincidentally, at the same time, and I think not coincidentally, this was happening a long time in the business, there were various parts of the business that believed the same. We need a data governance program, a team that can advocate for us. So we were both going to the business and pushing this idea of data governance. The last remark there, senior managers believed but did not totally understand, that really came from my CIO. My CIO, whenever I talk about data governance and data quality, says, Jim, I believe you. You guys have proved yourselves, but I don't quite understand it. So I think that's where we're going with what Robert's talking about, what we're talking about with the rest of the presentation. We try to make him understand why we're doing what we're doing. 2 years later, it took about 2 years. I've been at the group of companies now for 3.5 years. It took about 2 years before we got a couple of lucky breaks in terms of setting up a data governance program. Number one, there was the delivery group, the mail delivery group at Canada Post came to us and said, we're having a hard, every time we restructure a route, we have a hard time managing the data that needs to be managed. The data needs to be changed in order to restructure that route. So restructuring a route is quite simply what it is. It's, you got your letter carriers, and they go through a route. And in order to make the route a little bit more efficient or to change it for whatever reason, mostly efficiencies, you basically change the points of call on that route. Well, doing something as simple as that required a lot of coordination from a data management perspective. And what they came to us with is, Jim, can your data architecture team help out, make the data management piece a little bit less error prone? And they all approached it from the perspective that this is an IT issue, obviously. When we went in and took a look at it, it wasn't really an IT issue. It was the fact that the data rules were documented. There was no real accountability. So, simple issue when there was a mistake made on a route in a route restructure, no one knew who to go to get that mistake corrected or who's accountable for this data. Simple things like that. There were no data rules documented. It was all basically in people's heads, essentially. And you guys all know that. Nothing documented. One thing, I put a little light bulb there to illustrate a point. We did find that I think there's no failed data management or data governance initiative, because the amount of knowledge that the business and data architecture team gained from this initiative was invaluable. It really helped us dealing with these groups and architecting better solutions. So I don't think anything was lost in terms of effort, but we did make headway in terms of having the business understand that we really need to get our ducks in a row with regards to accountability, documentation, decision rules, and all that kind of good stuff. We got another lucky break, and the VP of Strategy finally picked up the ball and said, you know what, I want to set up a data governance program. And that's where we work with Stream Integration to get the program off the ground. So we did a lot of the foundational stuff, setting up policies, stewards, processes, data glossaries, communication. So that's a lot of the important foundational pieces that need to go into setting up a long-term viable program. And it's table stakes. That's what I call it. It's table stakes stuff. It's not exciting, but it needs to be done. But is that enough? And what I mean by that is the first time we went to the executive to give them a little report card where we're at, they were like, yeah, cool, you know, you guys are setting up data and getting data stewards, data glossaries and whatnot. By the second time you talk to them, you know, you're getting glazed over looks. They don't really care anymore. Because you're talking about, oh yeah, we've created, you know, we've documented this many more data elements. We've got data stewards. We've brought in this subject area. They're not really excited anymore. And actually, it ends up being that you get a certain group that isn't excited, and then a small portion that are actually, their ears perk up, and they're the opposite of excited. They start getting worried. They start thinking, well, you guys are doing all this work. This must cost a lot of time and money, right? So where's the value? So you get those two groups, the unexcited group and the group that thinks you're wasting a lot of money. So we realized pretty quickly you gotta change the message. It's gotta be about dollar signs, bottom line, essentially. The table stakes stuff needs to be done, but it's gotta be about increasing efficiencies, reducing churn, finding where we're actually benefiting the business. So the way we're approaching the program now in partnership with data architecture, being in partnership with the data governance group, is we're still doing all that table stake stuff. We're still setting up, you know, putting in new subject areas into the data glossary, making sure that we engage the data stewards and communicating and whatnot. But we're changing the language. We're changing the message that we communicate to the executive. Changing the language, making sure that they support the program. The program is going to be viable. So here's an example of how we change the message. One of Canada Post's most valuable assets is this address database. It is a pretty extensive address database and a pretty accurate address database, but it is made up of different sources. And a couple of things we did was we made sure we reconciled all the sources, understood them, and we standardized on the data cleansing, on the cleansing of these, because we were using different methods to cleanse addresses and bring them into the address repository. But we standardized stuff, so that stuff all sounds exciting to us, being data people. So we're all like, yeah, that's pretty cool. The imagination gets going. But when you start talking about standardizing data cleansing methodologies and whatnot with executives, they're like, that's great, Jim. I still don't know what you're talking about, and I really don't care. When we turn it into what are the benefits, and ignore the first part of the business case, the right hand side, okay, or the left for you guys. We realized that this is where they get excited. When we made accurate addresses more readily available to the call center, we ended up creating quite a bit of efficiency there, because the less time the call center folks spend on the phone and the less calls they take, the less money that we spend on the call center. The other thing is that, as I mentioned, the data asset, the addressing data asset is a pretty valuable asset for Canada Post. And making sure that we're increasing the value of that asset means that we can sell it more. And Canada Post does sell the address list to third parties, and we've managed to increase the value of those address lists. So I guess the takeaway message is that we got to continue. We can't get diverted from what we're doing. We got to continue doing the table stake stuff. In other words, setting up the stewards, glossaries, and all that, communication plan, and all that. But the message to the executive, in order for them to support the program, has to be different from, or catered towards what they want to hear. And that's not about cleansing data and the data quality. It's about what the value of that data quality is in cleansing that data.
Great. Thanks, Jeff. So I want you to notice the conversation that we just had, right? It's not about, hey, we improved the quality, or we have better data, or better IT functionality. I mean, the business is going to look at that and say, that's an IT problem. And you don't want it to be an IT problem. Governance is only sustainable when it's a business problem, not when it's an IT problem. Otherwise, it's just another IT project. And so, one of the things you can do is talk about it, not as improved quality and such, but terms such as opportunity revenue for data which is uniquely created. Something that Jim also mentioned was they're selling addresses. And I'm going to go into, in the next couple of slides here, how you might be able to look at the data in order to sell your data. And Gartner, by the way, has predicted that within the next couple of years, just a couple of short years, something like a third to half of all companies will be looking to monetize and sell their data. I mean, that's a significant statistic. Things like increasing market share. Now you've got the business interested in using data in new ways, such as customer loyalty programs that can establish more market share. Cost savings, when data improvements are realized. You don't talk about we have better quality data, we talk about how we will save money because you no longer have to do manual intervention on the data or other cost issues. We fix that, and here's the cost savings. Replacement costs. A lot of people are either retiring or moving on to the next company. If you can capture those data catalogs, that data understanding and knowledge out of that person's head into a metadata repository of some sort, that cost walks out the door, because now you have to replace that cost. I think, Jim, you had somebody walk out the door and took literally tens of millions of dollars to recreate that data set, or at least they had to do it over again because they could no longer use the old data set because it wasn't sustainable. Business services, new data services, when databases are integrated with external data. That's the big data story, right? As you bring new data in, now you can create new services. And then cost avoidance for risk potential, right? I can avoid future costs by looking at the possible risks, multiplying that times the cost, and now I have a whole other metric. And what we're talking about here with things like cost savings and replacement costs has to do for accounting with data along the statement of financial accounting standards. And there's three ways that accountants measure for data, or measure for assets. We'd like to see them measure for data, but that's hopefully in the future. But it's three ways: replacement, cost approach, an income approach, and a market approach. And so a cost approach, which is a way of identifying intangible assets, the analogy to this would be something like a patent. When I have a new product and I am selling that, I want to protect that product. And so in protecting that product, I will expense or realize a certain amount of expense to put a patent in place. That patent exists on a balance sheet as a replacement cost for innovating and getting a new patent, right? And they actually carry it as something that's called an identifiable intangible asset. Same thing happens with data when you improve it. Not necessarily when it gets generated or when I bring it in, but when we, as a governance operation, make improvements to that data, let's track those costs and put it on some kind of data statement, data financial statement that says that's replacement cost, that's the tangible asset value for data. Or for an income approach. This is income value when the incremental cash flows or cost savings. So as we do governance programs, as we do governance operations, if we ask the business, how much is it costing you to currently deal with the data in its current state? Now when we fix it, we can go back and say, how much have you saved? Tracking those costs allows you to account for the value of data based on a second standard accounting approach called the income approach. And then, of course, the most exciting is the market approach, where we take new data and new opportunities and create whole new businesses, such as a set of reports, as Jim was saying, is selling address lists to third parties, distributors that sell competitive or distribution reports to their customers. Lots of different ways that we can start to look at selling and using data, especially with the way that the clouds are being put in place. And then the fourth aspect I want to bring to your attention here is something that we call a statistical analysis And this gives you the number for the data confidence itself. If you have all of the information in a metadata repository, and that repository is something that you can query and do statistical analysis of, I can create correlations and associations and a lot of different statistical things that give us then a number that I can relate to the confidence, not of the whole IT department, but here's the key, and that is data governance allows us to look at data element by data element. And by data element, again, I'm not meaning a technical database element, but a business term, something that the business would say, cost of sales or something. That term then, we can hang values on, both from a statistical standpoint as well as an accounting standpoint, and talk to them in a different way. Talk to them about actual value of data by hanging real numbers on that concept. So, in almost closing, the idea is data value realization, or the data management realizes value if we can use a cost, income, and market approach to establish more value, more opportunity as we track replacement costs, cost avoidance from a risk mitigation standpoint, new data products, new data markets from the way that we use loyalty programs and such, and then entirely new data businesses if we can look to actually go ahead and start to monetize and sell the data. And so our message today is think not only about the concept of value, but the specifics about how you're going to measure value, and you can do that with some very specific accounting as well as statistical practices on the metadata repository that you keep. So in closing up, the bottom line is measurement. Right? Measure the IT projects. The way that we can do that is to embed value management into the project management systems that we have to track the remediation projects and such that we have for data improvement projects. Standard steward and domain data competency. We want to measure the capabilities and competencies of both our data governance processes as well as the resource capabilities of the people that are actually implementing those processes. We want to track the cost of data issues. What is it costing to do manually? We want to track the cost of data value improvements. What were the costs of the project? What was the return on investment in that project based on my cost savings? And then the bottom line of the bottom line is we still need to do the, what did you call that, Jim? The standard stuff.
Table stakes. The
table stakes of data cataloging, awareness, training people on what the stewardship process is. But all of it should be tracked. The costs are tracked, the savings are tracked, the cost avoidance is tracked, and then most importantly, when you get to that point, the data sales and monetization of data is tracked. And now you've got a realized value for your data. So thank you for your time. Questions, please?
We do have time for questions if there are any about data value management or what Jim is doing. I'll be right over with the microphone if you'll wait for just a moment, please.
It's actually more of a comment. I work in a quasi-government organization as well, where we have a lot of information, a lot of data on property. And the way that we value property, coincidentally, is exactly the way that you actually displayed in terms of the four approaches. We have really the three of them, not the statistical side on the bottom, but we actually use statistical methodology to come up with value. And we actually did this process of actually looking at our data and coming up with new markets and new ways of revenue generation. And it's quite interesting that from a Canada Post standpoint and an MPAC standpoint that we have a similarity, but we really didn't even know that similarity existed. So it was actually a really good eye-opener to see this presentation, at least for us here today.
Us too, for your validation, thank you.
Yeah, so yeah, exactly, it's a validation.
I think one thing to note is that we haven't really settled on one method. It depends on the case. I think a lot of times it depends on the case, whether you're dealing with an asset that you're selling to third parties, or whether you're dealing with something like the CRM case there, where you're looking at cost savings, like market value doesn't really apply. So it's not one method; it's all three.
Yep.
We do?
Hey, echo the comments we just heard, and have used some similar methods, but had a question I wanted to confirm. You have in the fourth quadrant, you have the confidence indicators, which are great, really high value. In our experience, those are deflators. In other words, you have these other three areas that identify unique value or give you a way to quantify it. If your confidence in the data is at 100%, those are all good. To the extent it's less than that, as often is the case, then does that work for you as a deflator or as a net reduction to those other measures, or does it stand alone?
So the equation is 1 minus that value. Put it in the denominator, and now you've got an inflator. So statistics and lies or something like that. No, I mean, and really, what are we talking about here? The data is not accounted for by the standard accounting principles on a balance sheet. But somewhere, someone, and it is obviously we are starting to say, we need to value data. Because the companies that are the most valuable are the companies that have the most information, Google and Facebook and those kind of things. Their market value to the actual, book value to market value is a huge difference. So there's a gap here, and we've got to start accounting for it. And whether it's right or wrong right now, start with some value. And maybe somebody will say, that's not quite right. Well, that's great. It's better than having nothing. And that's where we're coming from.
And a lack of quality would impair the value of the asset. And so you capture that.
Absolutely.
Great, thank you.
Go ahead. In the back.
Hi. We've all heard about data being an asset. That's been a big theme over the past day or two. Does data ever switch to become a liability? So is there ever a time when, through privacy issues or whatever agreement I have, I can't use the data, but now I have a cost of maintaining it, the cost of maintaining the security, and how does that affect the long-term goal of the long-term strategy of a company?
Yeah, that's a great question.
I think that could be a whole other conference, actually, but go ahead.
Consequences.
Yeah, I guess the best situation or scenario we come up with regards to that is when, for some legal reason, you got to hold on or archive data that you no longer use for any operational reason, and it's a good question. I probably got to think about it more, but yeah, there is. You got to. Well, the way you value that again is what is the risk, the litigation risk of losing that data or it getting out, right? So there is a value to that, an opportunity cost, right? So
There's one more example. We have a bunch of folks here from financial services. If you have data around fraud, anti-money laundering, financial crimes that you're not acting on, that's not being monitored, that's not included in your customer risk ratings or in your filings, it's a liability. And some of the fines and penalties that banks internationally have been paying have been levied because they actually had a reason to know that some of their clients were money laundering or executing on frauds, and they were using it. So sometimes data that has a regulatory or other aspect is a liability if we're not including it in our analysis. And I think you leave room for valuing that here as a potential liability.
Even more so, if you think about a data financial statement that's got to include assets as well as liabilities, and I thank you for pointing that out. I mean, that their data is an asset, but as you, in a risk mitigation situation, you've got to offset that against it as a liability as well. And that's when you come up with your financial statement, which is assets and liabilities, of course. And so thank you, that was very insightful.
Great. Thank you so much, Robert and James, for your presentation.